I expect Bitcoin to go on for hundreds, if not thousands of years. Each one of us has 2, 3, 5, 10 years we can contribute to it. And then, you could get out of the way and let someone else carry the torch. I do think about it. I think anybody that believes in decentralization has to keep in mind their role. But I think that Satoshi set a really good example. And I think we've seen lots of Bitcoiners during the fork wars. I think there were very strong voices in the Bitcoin community. And clearly, I think that the message here, or the idea, is everybody has to take their turn, and they have to drive the network forward, and they have to do what they can to contribute to the asset class. And there'll be a time when they'll step off of stage, and someone else is going to have to pick up and carry the torch forward. So, I wouldn't be here if it weren't for the early cypherpunks, and I wouldn't be here if it weren't for all the heroic activity that took place during the block size wars. And I don't think I'd be here if it weren't for leadership at places like Fidelity, where, let's take Abigail Johnson, championed Bitcoin at Fidelity, and my first Bitcoin was purchased from Fidelity. I wouldn't be here if it weren't for people like Eric Weiss, who orange pilled me. But my view of my role is we needed to integrate Bitcoin into the public markets, into institutional investors. So I couldn't do what they did, but what I could do is I could show that Bitcoin makes a good treasury asset for a public company. I could actually educate public investors and institutional investors. I could work through the legal issues, the accounting issues, the compliance issues that any corporation faces if they want to integrate into the system. And so that needed to be done. There'll come a time, I look forward to the point when I'm irrelevant, when there's 100 other companies that are bigger than me. When Apple Computer buys $25 billion of Bitcoin and Google buys 50 billion of Bitcoin, and then people don't remember MicroStrategy and we can't keep up anymore. And I'll be like that surfer that surfs the wave, and then the wave passes you and you just get back on the board and you paddle behind the wave and people don't notice you're there anymore. That'll be okay. I mean, I think, I expect Bitcoin to go on for hundreds, if not thousands of years. Each one of us has 2, 3, 5, 10 years we can contribute to it, and then you could get out of the way and let someone else carry the torch. Germans are great engineers, and I love German minds, and I love German engineering, and I think that Bitcoin, of course, is the first example of monetary engineering. So it wouldn't surprise me that Germans that study so much in the world of engineering, they're so fastidious in the way that they engineer their structures, their cars, their engines, their machines. They'll look at Bitcoin and they'll realize there's engineering beauty there. And so I think that's one of the reasons why there's a lot of passion for Bitcoin in Germany. With regard to companies, I think the key to keep in mind here is that at every single stage, Bitcoin needs something different. And starting in the second quarter of 2020 was the era of institutional adoption. And for an institution to adopt Bitcoin, they have to solve the issue of custody, because they have all of these legal restrictions about how they can custody the assets. And they have to solve the corporate governance issues. Like, for us to buy it, we have to figure out how to disclose it, and then how to manage our shareholder relations. It's a very intricate thing. And then there's an accounting issue. The accounting for Bitcoin was set by FASB when the largest holding of a publicly traded company was maybe $1 million. When we started looking to buy Bitcoin, we did a search, and we found that maybe one company had owned a couple of $1 million of Bitcoin once a few years ago, overstock or something. It was a trivial thing. So FASB set the accounting treatment to be the most conservative you could imagine, which is you can never write it up, you can only write it down, and you have to write it down to the lowest bid you can find from anybody, anywhere in the world in the history of the ownership of the asset. So that's the same as if you bought something and you went to a party on Saturday night and you asked everybody in the party whether they would buy it from you, and someone told you they'd give you $1 for it. So you wrote it down to $1 and then you held it at $1 for the next 100 years. Okay, that is prejudicial, kind of hostile accounting. It's toxic for a public company with a GAAP statement, and so there's no reason for the accountants to take any other treatment because they were just being extremely conservative. Now we're in a situation where there are billions and billions of dollars of Bitcoin on publicly traded balance sheets. And FASB has taken up the project, and there's massive interest in reforming that accounting. So I think that if you're a publicly traded company or a conservatively run company, and the majority of your enterprise value comes from selling cars or selling software or selling anything else, you can't reasonably hold a large amount of Bitcoin on your balance sheet because the volatility of the accounting, it impairs the transparency of your P&L and your balance sheet, and therefore it's toxic to you as a public company. So a conservative CFO or CEO is not going to do it until you get to the point where you could adopt fair value accounting, where you could actually show the true value of the asset. So you might think that if you're a consumer, you might think, oh, the regulators don't matter. But there's a small number of people on a committee that set accounting standards for all these publicly traded companies, and they do matter. And to the extent that it is impossible to figure out how much the Bitcoin is worth, then that means that 10,000 entities with trillions and trillions of dollars will say, we're just going to wait. We're going to wait. And so I think that the reason, if you look at European companies, they're more conservative than American companies. The most aggressive entrepreneurs are like American private companies, like the Ubers or the Airbnbs or fairly aggressive. And then sometimes publicly traded companies in America, if they're run by founders, they can take risks. But traditionally in Europe, it's businesses are more conservative. They go a bit, they wait for the American companies to take the risk in some cases, and they focus upon engineering. So I think that what will happen is the accounting will matter, and the accounting will be one element, and the other elements will be regulatory clarity from the SEC and the CFTC and Treasury. Though that will allow banks and publicly traded companies to start to handle the asset, then public investors will handle the asset. And then I think you'll see European companies look at that and they will be emboldened by that and they'll follow. But this entire process will probably unfold over a decade, from 2020 to 2030. So with regard to the regulatory issues, first of all, I think that if you go back and you look at the classes Gensler taught at MIT in 2018, they're all on YouTube, and you can just Google Gensler blockchain and money and you'll see them all. I think he laid out clearly the theory of digital property and digital commodities and digital currency and all the issues. And what he pointed out was there are permissioned blockchains and there are permissionless blockchains. And of course, Satoshi's brilliance was figuring out how to transfer value and or manifest value without a trusted intermediary. And the idea is proof of work. But if you want to create a digital commodity, you have to create something without an issuer. You can't have a small group of people to control the protocol, because a group of people controlling the protocol creates an investment contract, and now you're making an investment of money relying on the efforts of others. So the idea here is you have to have a digital commodity without an issuer, and then you have to let it diffuse for a long enough period of time without any protocol, without any material change to the economics such that it seasons, right? And so Bitcoin has this 12, 13-year history, and the fact that the monetary protocol was set, the fact that that it traded without value from January 3rd, 2009 till pizza day, 500 years without value, is an immaculate conception that has never been reproduced. The fact that Satoshi never moved a coin is another important fact. The fact that it is proof of work is a third important fact. The fact that during the block size wars, right, the small blockers won is another important fact. The fact that you got an unvarnished string of soft forks as opposed to hard forks, those are all important facts. And so you put them all together, you've got one thing that's universally acknowledged as a digital commodity, Bitcoin. It's the only thing that's ever been universally acknowledged. It's the only non-controversial, decision. Now you've got a bunch of other things that are interesting. The world has a big thirst for digital currency in the form of a stable USD coin. Like the world wants a Tether or a Circle coin. In fact, the world probably wants $10 trillion of it. And the world's only got about 150 billion right now. So there is a demand for that, but then there's a big debate about who can issue it, a bank, a company, a set of entrepreneurs, right? Who? And that will continue. I think that with regard to regulatory clarity, I think the theory was pretty clear in 2010, actually. The theory was pretty clear in 2015. If you want to create a commodity, it must have energy, and it must be without an issuer. Okay, so if I take gold or oranges or oil or a bushel of grain, and if I remove 99.95% of the energy, you have an imaginary orange, imaginary oil. You have a security. If you remove the energy from a commodity, you create a security. That's just common sense, right? And if a small group of programmers can write a piece of software that makes all of the oil in Asia not burn, or makes all of the oranges in Florida not edible, that's a security. That's not a commodity. So if you could double the density of gold by writing a piece of software code, it wouldn't be a commodity anymore. It would be a security, right? So this is kind of common sense. I mean, you don't even need the law. You just kind of need to think common sense. If 5 programmers get to make all your food not edible, is the food a commodity anymore? And the answer is no, it's a coupon or it's a security. So in this particular case, Gensler actually said when he was put in the SEC that staking tokens, if there's a stake and you generate yield, that's an investment contract. He said that a year ago. So I think he's become more forceful in his articulation in the aftermath of the crypto crash. And I think what he's saying is very straightforward. If you want to create a commodity, it has to be without an issuer. It has to flunk the Howey test. And if you've got an issuer, if you've got a small group of people, if they have control over the protocol, then it's probably a security for common sense reasons. I think that the regulators will move forward on this. There'll be some back and forth. There's going to be political debate. Most of the crypto industry has a vested interest in keeping ambiguity, right? Keeping this ambiguous, right? And so most of them, they'll say, well, we haven't gotten clear guidance. Well, there is clear guidance. If you've got a company and you issue equity in the form of a token, it's a security. There's clear guidance, right? If you created a company and you gave yourself the stock and then you sold stock to investors and then you sold the general public and then you keep changing the code that controls what you can do with the stock, it's a security. So I think what Gensler said is just because you don't like the guidance doesn't mean you don't have it, right? To that point, I think that we're going to actually see the industry mature. I think it's getting harder and harder to feign ignorance and for people to be oblivious to these material differences. I think that there are some crypto organizations that are lobbying both sides of the fence, right? And I think that's frustrating. But I also think there are some Bitcoin only organizations that are doing a good job of articulating the ethical benefits of proof of work. I do support some of them, and other people that I know support some of them. And I would encourage anybody to support the Bitcoin only organizations because they don't have a conflict of interest. I think, to the point, if we start from basic principles, we wanted a treasury reserve asset and we wanted a digital gold or a digital commodity without an issuer that could be global and neutral. And so we looked at all of the thousands and thousands of cryptos and we concluded it needed to be a proof of work type asset. And we looked at every proof of work asset, and Bitcoin was the dominant, and it was the one with the best monetary policy, with the clearest ideology. And then we asked the question, well, will it be banned? Will it be copied? Will it be hacked? It hadn't been hacked for a decade, so I figured that was good. Will it be banned? No, it was anointed as property by the IRS and as a commodity, and we knew it was a commodity. And I think those facts have only improved. I think it's pretty clear there's support in the Senate and Congress and the SEC and the CFTC all through the world, even across many governments, for Bitcoin as a digital commodity. There are a lot of regulators that have concerns about when you use it as a currency because they see it might be threatening to their local currencies. Look, every country in the world has capital controls. You can't just move capital out of China. You can't move capital out of Argentina. You can't move capital out of Lebanon or Turkey. So when it's used as currency, you get a lot of capital control issues or KYC issues or the like, AML issues. But as property, it's not controversial. And it looks like even as cross-border payments, it's not going to be. A lot of people are going to allow you to do cross-border payments. So I think that in the dimension of will it be banned, no, it's going the opposite direction. It's not being banned. And now we're back to this issue of will it be copied. It got copied thousands of times, but most of the times the copies were imperfect because the people that copied it didn't understand the engineering elegance. It's like copying the wheel but making it an octagon, or making it a rectangle or something. It's like they copied it wrong. It actually was extremely elegant because the goal of Bitcoin was to be able to support hundreds of trillions of dollars on the base layer and let you build other layers like Lightning and applications on top of it and serve as the foundation. So they copied it wrong for the most part. When you put all the other Turing complete functionality into the other copies, they made a mistake. What they should have done is just copied it right. But of course, you can't really copy the Immaculate Conception. And everybody that copied it wanted to make money. And the point is, if you really wanted to copy it, you need to create something more elegant, and you need to not have any economic interest in it, and you need to give it as a gift to the world, and you can't actually make money off it, and you need to disappear. So that's the way to copy it. I think that the irony right now, and I'll finish my comment, is people are very busy uncopying it. Right? Bitcoin was maybe 75% of proof of work networks before the merge, and now it's 95%. So in fact, it's been uncopied because people, I used to joke, right? If you have a brilliant engineering insight, your competitor may in fact look at it and say, why would I want to do that thing? And so Bitcoin is so brilliant that many of the competitors, they're blinded by their own personal self-interest and their own egos. And so rather than appreciate the brilliance of it, they don't actually appreciate the fact that the whole point was to avoid having a company or avoid having a counterparty or avoid having a set of programs. Some people think I have to keep changing the code. I have to keep upgrading the software. The brilliance is not changing the software. right? What they don't realize is to be a commodity, you can't keep changing it. But if you're a software engineer, you want to keep changing stuff. So half of the crypto world wants to keep changing the code. And what they don't realize is if you can change the code of Bitcoin, you probably made it a security, not a commodity. And if you remove the energy from Bitcoin, you probably made it a security, not a commodity. So the idea that a bunch of smart engineers are going to add a bunch of functionality, change it every year, and suck the energy out of it is converting a digital commodity into a digital security. They just don't have enough grounding in all of the various disciplines to realize how horrific a mistake that is.